When you pass away, your chosen successor trustee steps in. Their job is simple and private. They don't go to court. They follow your instructions in the trust document, pay any remaining bills and taxes, and then distribute the assets to your beneficiaries. The whole process can take weeks, not years. Most folks think their money is sitting in a vault with their name on it, but the bank lent it out the moment you made that deposit. What you really have is an IOU, a promise from the bank to give it back. And in a crisis, that promise can be broken. A bank run happens when everyone loses faith and wants their cash at the same time. But the bank doesn't have it. It's all been lent out. So when 40 people show up demanding $40,000, the bank only has enough for the first few. That's when panic really sets in. When a bank fails, the government steps in, not to save your savings, but to save the bank itself. They call it a bail-in. Your deposits are no longer yours. They become part of the bank's rescue plan. You become an investor in a failing institution overnight. In a bail-in, a portion of your deposit is simply converted into bank stock. That $41,000 you had for a house down payment. Suddenly, $12,000 of it is now worthless shares in a broken bank. The money you needed is gone. Let's put some real numbers on the board. Say you've got $41,200 saved up. It's a solid emergency fund, maybe a down payment on a starter home. If it's all in one bank account, every single dollar of it is exposed in a bail-in situation. Here's the hard truth. That $41,000 is a liability on the bank's books. When they perform a bail-in, they are legally allowed to convert that liability into equity. In plain English, they turn your cash into shares of their own failing company. You don't get a vote. You might be thinking, but I didn't agree to this. The truth is, you did. It's buried in the fine print of the account agreement you signed when you opened it. The legal framework for bail-ins was put in place years ago. Most people just never read that far. But here's the good news. You can protect yourself. The FDIC insures you for up to $250,000 per bank per ownership category. If you have 41,000, you just need to make sure it's not all sitting in one basket. Spread it out and you're safe. It's a lot to take in, I know, but understanding the rules of the game is the first step to winning it. You don't need to be afraid, you just need to be smart. And being smart starts with knowing exactly where your money lives and how it's protected. This isn't some theory that might happen someday. It's already happened in other countries. Ordinary people, just like you, watched their savings get cut overnight. They woke up to find their bank accounts had become stock portfolios, and their money for rent was suddenly gone. Imagine a giant pair of scissors coming down on your stack of cash. That's the bail-in. They take a percentage of your deposit, a haircut they call it, and use it to prop up the failing bank. You don't get that money back. It's gone, replaced by near-worthless paper. After the bail-in, families sit at their kitchen tables surrounded by bills they can no longer pay. They're holding stock certificates instead of cash. The dream of a new home, a college education for the kids, a comfortable retirement, it all gets pushed further away, sometimes forever. It's not just the wealthy who get hit. It's the young couple saving for their first home, the retiree living on a fixed income, the small business owner trying to make payroll. A bail-in doesn't discriminate. If your money is in the wrong place, it's at risk, plain and simple. But it doesn't have to be this way. Look at this. 4 jars, 4 banks, 4 layers of protection. By simply dividing that $41,000 across different institutions, you build a wall around your savings. A bail-in at one bank can't touch the rest. This isn't a conspiracy theory, it's codified law. The legal machinery for bail-ins was built after the last big financial crisis. It's called the Orderly Liquidation Authority. It gives regulators the power to step in and restructure a failing bank using your deposits as the fuel. Some banks are considered too big to fail. Ironically, that makes your money in them more exposed, not less. These systemically important institutions are the most likely to trigger a bail-in. Your deposit isn't just savings anymore. It's a tool for propping up a giant. And this isn't just an American rule. It's a global playbook now. From Europe to Asia, the bail-in has become the standard way to handle failing banks. Regulators around the world have agreed that the depositors, not the taxpayers, should pay for the cleanup. So here's the plan for your $41,200. Put 10,300 in Bank A, another 10,300 in a credit union, 10,300 in Bank B, and the last 10,300 in treasury bills or a home safe. Protected. See that? Peace of mind. It's not about hiding your money under a mattress. It's about being smart. It's about understanding that the system is designed to protect itself first. Your job is to make sure you're not the one paying for it. And now you know how. Think of your savings like a castle made of sand. It looks solid, impressive even, but its foundation is weak. The tide of an economic crisis will come in, and if all your sand is in one pile, that first wave will wash it all away. You can't build a fortress on a single grain. When the tide rises, that single sandcastle doesn't stand a chance. The water erodes the base, the towers crumble, and before you know it, there's nothing left but a muddy patch. That's what a bail-in feels like. Your life's work, your security, dissolving in front of you. In the aftermath, you're left sifting through the wreckage, finding nothing but worthless stock certificates where your solid cash used to be. You realize too late that the foundation was never real. It was always just confidence. And when that confidence broke, everything broke with it. There used to be a different way. They called it a bailout. The government would step in with taxpayer money to save the bank, but that was unpopular, so they switched the rules. Now it's a bail-in. They take the money from you, the depositor, to do the saving. But look at this. 4 separate castles built on 4 different hills. The tide can't wash them all away at once. If one crumbles, the others stand strong. That's the power of diversification. It's not complicated, it's just common sense. And it's the only real protection. The magic number to remember is $250,000. That's the FDIC insurance limit per depositor, per bank, for each ownership category. If you have $41,200 in one bank, you're well under that limit. But if you have $400,000, you're exposed. But here's where it gets interesting. Ownership category matters. If you're married, you and your spouse can each have an individual account plus a joint account, all at the same bank. That's 3 separate $250,000 limits. Suddenly, you can protect a lot more money in one place. Credit unions are a little different. They have their own insurance fund, the NCUA, but the limit is the same, $250,000, so don't be afraid to use them. They often have better rates and a more community-focused feel, and they offer the same protection. For true bail-in immunity, you have to look beyond the banking system entirely. Treasury bills and I-bonds are backed by the full faith and credit of the U.S. government. They're not deposits, so they can't be bailout in. And a good old-fashioned home safe still works, too. Look at that view. It gives you perspective, doesn't it? Financial planning is the same way. You need to step back and see the whole landscape, not just the spot where you're standing. When you can see the big picture, you can see the risks, and you can see the path to safety. A crisis at one bank can spread like a line of dominoes. Fear is contagious. When people see one institution failing, they start to wonder about their own bank. They rush to pull their money out, and suddenly, a problem at one place becomes a problem everywhere. Once that first domino falls, it's almost impossible to stop the chain reaction. You can run, you can shout, you can try to hold it up with your own 2 hands, but the momentum is too great. That's the nature of a banking panic. It's a force of its own. And when the cascade is over, you're left standing in the rubble. All those banks, all those savings gone. You can't help but wonder if only people had known, if only they had spread their money around. This didn't have to happen. But now it's too late. Walking through the wreckage, you pick up a single cash pack and a worthless stock certificate. You hold them in your hands side by side. This is what was lost. This is what replaced it. It's a powerful, heartbreaking reminder of what's at stake when you put all your eggs in one basket. But out of the rubble, a new, smarter city can be built. Look, 4 separate lines, each with its own foundation, each protected by its own shield. This is the new way. This is resilience. This is what happens when we learn from the past and build a stronger future. Let's walk through the mechanics one more time. Before the bail-in, you have $41,200 in cash. After the bail-in, you might have $28,400 in cash and $12,800 in stock. You didn't lose it, it was just transformed into something you can't spend. And that stock they give you, It's not like Apple or Microsoft stock you can sell tomorrow. It's usually restricted, sometimes for months or even years. And it's shares in a bank that just failed. It's worth a fraction of what your cash was. You're stuck with it. The size of the haircut depends on how bad the bank's problems are. It could be 10%, it could be 30%, it could be more. Regulators decide overnight. You wake up and a chunk of your savings is just gone. No warning, no vote, no appeal. It's important to understand, a bail-in isn't theft. It's legal. It's written into the law. The bank isn't stealing your money, it's exercising its contractual right to convert your deposit into equity. It feels the same, but the process is different, and that's what makes it so hard to fight. Knowledge is power, but only if you use it. You can sit in a beautiful library and read all the books in the world, but if you never apply what you learn, it's just entertainment. The same goes for this. You have the knowledge. Now you have to take the action. Think of a bank like a big ship. It looks unsinkable, but it's got a hole in the hull called bad loans. Water is pouring in and the ship is starting to list. The captain, the regulator, has a choice. Let it sink or throw something overboard to keep it afloat. So the captain pulls the lever. Overboard goes the cargo, your cash. It sinks to the bottom of the ocean, lost forever. And in its place, a rain of stock certificates falls onto the deck. The ship is saved, but the passengers, they're left holding worthless paper. The ship sails on, stable now. The crew celebrates on the bridge, but down on the deck the passengers are huddled together, devastated. They've lost everything. And all they can do is watch as a small boat approaches, carrying life preservers labeled knowledge and diversification. But it's not too late for others. On the shore, a crowd has gathered. A wise old mentor stands before them, holding a book and pointing to a diagram of safe harbors. He's sharing the lessons learned from the shipwreck, so others can avoid the same fate. The crowd listens, eager to learn. Now look at the harbor. 4 strong ships are moored there, each representing a different kind of institution. They're separate, so if one hits trouble, the others stay afloat. The people on the dock are calm and confident, dividing their savings among them. This is what safety looks like. Now here's some good news. Certain accounts are often excluded from bail-ins. Retirement accounts like IRAs and 401(k)s are usually protected. That money is yours and the rules are different. So if you've got that $41,000 in an IRA at the same bank, it might be safe. But don't get too comfortable. A checking account, a savings account, and a money market account at the same bank are all treated the same. They all count toward that single $250,000 limit. You can't get extra coverage just by having different account types at the same place. Be careful with brokered CDS too. They might offer a great rate, but they can be complicated. The money might be in a bank you've never heard of, and the insurance rules can be tricky. Always ask questions. Know exactly where your money is and how it's protected. Here's your checklist. 1. Know your institutions. 2. Stay under $250 per bank. 3. Use multiple banks. 4. Add a credit union. 5. Consider treasuries. 6. Keep some physical cash. 7. Review it all annually. Follow these steps, and you can sleep soundly. Look at this view. It's a long way from where we started, isn't it? That's the journey of financial literacy. It starts with fear and confusion, but if you keep climbing, you reach a place of clarity and peace. You can see the whole landscape. You understand how it all works. This isn't just a theoretical exercise. It's already happened. Look at this map. Those red dots are places where bail-ins have been used. Ordinary people in those countries woke up to find their savings had been cut. It's not a question of if anymore, it's a question of when. Imagine a scene like this in your own town. People lining up at ATMs only to find their balances reduced. Receipts crumpled on the ground, showing the proof of loss. A bank across the street, locked up tight, with your cash visible through the window but completely out of reach. Picture a family sitting at their kitchen table, surrounded by bills they can't pay. They're holding stock certificates instead of cash. The dreams they had for their children, for their retirement, are suddenly gone. This is the human cost of a bail-in. This is what's at stake. But the lesson is spreading. Now, Gramps Rick is on a global stage, sharing the wisdom with people from all over the world. The same strategies that protect your $41,000 in the US work just as well in Europe, in Asia, everywhere. Financial wisdom knows no borders. Imagine a world where everyone knows the rules, where people in every country have built their own financial fortresses, where a crisis in one place can't bring down the whole system. That's the world we can build, one informed saver at a time. It starts with you, right now. A quick word about money market funds. They sound safe, don't they? Like a savings account, but they're not. They're investments and they're not FDIC insured. In a crisis, they can break the buck, meaning your balance can actually go down. They're not the same as a bank account. Treasury bills or T-bills are different. They're backed by the US government, so they're incredibly safe, but they're not cash. You can't just swipe a debit card and spend them. They're a great place to park money you won't need for a while, but they're not for everyday expenses. Here's the thing about fear. It's useless without action. You can lie awake at night worrying about a bail-in, but it won't change a thing. Or you can spend an hour setting up a few extra accounts and then sleep like a baby for the rest of your life. The choice is yours. So here's the truth. Your money is your responsibility. No one else is going to protect it for you. Not the bank, not the government, not some financial advisor you've never met. It's on you. But the good news is you're more than capable. You have the knowledge, you have the plan. Look at that horizon. It's not just the end of a journey, it's the beginning of a new one. A journey where you're in control, where your money is safe, where you can face the future with confidence, not fear. That's the destination we've been working toward, and now it's yours. You know, the best way to make sure a lesson sticks is to pass it on. Imagine sitting on a porch with your grandchild, holding a little wooden model of 4 jars. You explain that this one is for the bank, this one for the credit union, this one for the treasury, and this one for the safe at home. The child looks at you with wide eyes and asks, "But Grandpa, what if I don't have much money?" You smile and show them their own allowance. Even a few dollars can be divided up. It's not about the amount, it's about the habit. Plant that seed early, and it will grow with them. Then the child asks the smart question, "What happens if one jar breaks?" You gently knock over the bank jar. The coins spill out, but the other 3 jars stand tall and full. The child's face lights up with understanding. That's the power of diversification, made simple. But what if all the jars break? The child wonders. You tap each one. The glass bank jar might crack, but the clay credit union jar is sturdy, the metal treasury jar is strong, and the plastic safe jar is flexible. Different materials, different strengths. That's true resilience. Years later, you watch from the doorway as your grandchild, now grown, sits on that same porch with her own little one. She's holding the same worn wooden model, explaining the 4 jars. A tear of joy rolls down your cheek. The legacy is secure. The wisdom will live on forever. All right, let's get practical. How do you actually do this? Step 1, list all your current savings. Step 2, identify every bank and credit union you're already using. Step 3, check your FDIC or NCUA coverage online. It takes 5 minutes and it's free. Step 4, choose 2 or 3 additional institutions. Look for ones with good rates and low fees. Step 5, open the new accounts. You can do it all online in under an hour. Step 6, transfer your funds and divide that $41,200 into 4 equal piles. And a word about those payment apps: Venmo, PayPal, Cash App. They're convenient for splitting a dinner bill, but they are not banks. Money sitting in them is usually not FDIC insured. If the company runs into trouble, that cash could disappear. Keep your savings in real banks. So here's the bottom line. 1 bank equals 1 basket equals 1 risk. 4 banks equals 4 baskets equals peace of mind. It's that simple. You don't need a finance degree. You don't need a fancy advisor. You just need to take an afternoon and spread your money around. Look at that sunrise. It's a new day, a fresh start. You have the knowledge, you have the plan, and now you have the motivation. The sun is rising on a future where your savings are safe, your family is secure, and your peace of mind is unshakable. Go get it! The financial system is a big, complicated machine with a lot of moving parts, gears and pistons and conveyor belts all working together. And in that machine, there's one specific gear labeled bail-in. It's designed to activate only when things go wrong. But if you're not careful, it can crush you. Watch what happens when that gear engages. Your cash packs go in, but they don't all come out the same. Part of them emerges as cash, but a chunk is ground up and transformed into worthless stock certificates that tumble onto a conveyor belt headed for the trash. That's the bail-in mechanism. For the person who ignored the warnings, the aftermath is devastating. They're sitting in their living room, surrounded by bills they can't pay. On the table is a tiny stack of cash and a huge pile of worthless stock. Their dreams, their security, their future, all gone in an instant. But look across the street. Another person who listened and acted is sitting comfortably in their armchair, reading a book. Through the window, you can see 4 small machines running smoothly, each with a stack of cash inside, each protected by its own shield. Peace of mind is real. Now the machine has been redesigned. The dangerous bail-in gear is gone, replaced by 4 separate, interconnected machines, each with its own shield. People move calmly between them, dividing their cash. The system is safer, more resilient. This is the future we can build together. If you're married, you have even more protection options. You and your spouse can each have an individual account, plus a joint account, all at the same bank. That's 3 separate $250,000 limits. So that $41,000 could be just a small part of a much larger, fully protected sum. Trust accounts offer another layer. A revocable living trust can provide up to $250,000 of coverage per beneficiary. So if you have a trust for your spouse and 2 kids, that's $750,000 of protection at a single bank. Powerful stuff. Small business owners, listen up. Your business account is separate from your personal account for insurance purposes. So you could have $41,000 in your personal account and another $41,000 in your business account at the same bank, and both would be fully covered. Don't mix them up. You can even stack these categories. Imagine a couple with individual accounts, a joint account, a trust with 2 beneficiaries, and a small business account. At one bank, they could protect nearly $2 million. That's the power of understanding the rules and using them to your advantage. Look at this view. This is what it feels like to reach the peak of understanding. You can see the whole landscape below you, the risks, the safe paths, the destinations. You've climbed the mountain of financial literacy, and now you have the clarity that only comes from the summit. But let's not forget what's at stake. This family lost everything. Their home, their savings, their dreams, all sold at auction because they didn't know the rules. They sit on the curb, watching their life get packed up and carried away. This is the human cost of financial ignorance. Now look at this family. They're having a barbecue on their porch, laughing and enjoying life. Behind them, a TV shows news of a banking crisis, but they're completely unbothered. Why? Because they prepared. Their savings are spread out, protected. The storm rages, but they're safe at home. For those who didn't prepare, life becomes a struggle. A small apartment, a pile of bills, opportunities lost. The teenagers' college dreams are on hold. The parents are exhausted. But then, a gentle knock at the door. It's Gramps Rick with a basket of groceries and a book. It's not too late to learn. Years pass. That teenager is now a young man, sitting in his own office. He's a financial advisor, helping others avoid the same fate. On his desk sits a small model of the 4 jars. On the wall hangs a photo of him with his parents, healthy and happy. The legacy continues. And in the town square, a statue stands. It's Gramps Rick, holding the 4 jars aloft. People of all ages gather around it, placing flowers, taking photos. A community transformed by wisdom. A legacy that will last for generations. This is what's possible when we share what we know. So how do you verify that your money is actually protected? Go to the FDIC's website and use their tool, EDIE. It's simple. You enter your bank and your balances, and it tells you exactly how much is insured. Do the same for your credit union with the NCUA's estimator. Confirm your safety. Now a common mistake, thinking that multiple accounts at the same bank give you extra coverage. They don't. If you have a checking account, a savings account, and a money market account, all in your name alone, they're all added together for insurance purposes. One limit, one basket. The same goes for CDs. You might have a 6-month CD, a 1-year CD, and a 2-year CD all at the same bank. They're all added together. To truly diversify your CDs, you need to spread them across different banks. A ladder across institutions, not just across time. Remember, financial protection isn't a one-time event. It's an annual practice. Set a date on your calendar, maybe your birthday or New Year's Day, and make it your financial checkup day. Review your accounts, check for bank mergers, update your beneficiaries. An hour a year keeps the bail-in away. Look at that sunset. It's the end of a long day, a long journey, but it's also beautiful, peaceful, fulfilling. That's what financial security feels like. Not the absence of worry, but the presence of peace. You've done the work. You've learned the lessons. Now you can rest. The future of money is changing. Digital currencies, online banks, fintech apps. It's exciting, but it also brings new risks. At a crossroads, you have a choice. The centralized path, where all your digital cash is in one giant vulnerable vault, or the decentralized path, with multiple shields and safe harbors. Those who choose the centralized path face a rude awakening. When the system crashes, their digital balances are slashed in an instant. They stare at their phones in horror as their money disappears. A bail-in in the digital age is faster, cleaner, and even more devastating. But those on the decentralized path are safe. A family sits around a table, each holding a different device. One shows a bank app, one a credit union app, one a treasury app, one a digital wallet. All the screens are green. All the balances are stable. Diversification works in any era. Look at this split screen. On the left, chaos and despair. On the right, peace and security. The same storm, two different outcomes. The only difference, choice. One group chose the easy, familiar path. The other chose the wise, diversified path. The results speak for themselves. Now look at the city. It's transformed. The old centralized building has been repurposed, and the decentralized, shielded buildings thrive. People of all ages move confidently between them. And in the town square, a statue of Gramps Rick stands, holding the 4 jars. His wisdom is now eternal. Let's talk about your emergency fund. That 3 to 6 months of expenses you keep for a rainy day. It needs to be both liquid and protected. So divide it up. Keep 1 month's worth in a checking account for immediate access. Put another month in a savings account, and another in a credit union share account. If you have more than $250,000, don't panic. There are services like CDARS and ICS that will spread your large deposit across multiple banks for you. You get one statement, one interest rate, and full FDIC coverage on the entire amount. It's protection made simple. A word of caution about international bank accounts. The rules are different in every country. Some have deposit insurance, some don't. The limits vary. If you have money overseas, do your research. Don't assume that US-style protection applies. When in doubt, ask a local expert. Here's the master plan laid out on a roadmap. Start here at the single exposed bank. Then research, identify, open, divide, transfer, verify, and finish here at the destination. 4 institutions, $41,200, 100% protected. The map is clear. The path is yours to walk. Look at this view, Bryce Canyon at sunset. The hoodoos stand tall and ancient, carved by time and weather. They've been here for millions of years, and they'll be here for millions more. That's the kind of permanence you're building with your financial fortress. Something that will last for generations. So why do people leave their money exposed, even when they know the danger? It's the psychology of risk. At a crossroads, there's a safe path that requires a little effort and a dangerous path that's familiar and easy. Too often, inertia and procrastination pull us toward the cliff. The person walks toward the cliff, hypnotized by the comfort of doing nothing. They drag a heavy ball and chain labeled procrastination. Above their head, thought bubbles float by. I'll do it tomorrow. It won't happen to me. It's too much work. The excuses pile up as they near the edge. And then they fall. The weight of inaction drags them down into the pit below. Gramps Rick arrives at the cliff's edge just in time to see it happen, his face a picture of despair. He was too late. The consequences of procrastination are real, and they're devastating. But look, another person chose differently. They're in the safe village now, surrounded by the 4 jars, happily dividing their cash. They wave gratefully at Gramps Rick, who watches from the edge with a warm smile. It's never too late to choose wisely. The safe path is always open. And now the cliff has a bridge. A sturdy wooden bridge, built by those who listened, leading directly to the safe village. The ball of procrastination has been broken into pieces and used as paving stones. A steady stream of people crosses confidently. The door is always open. Welcome home. If you're part of a couple, this is a team sport. Sit down together and coordinate your strategy. His accounts, her accounts, joint accounts. Make sure you're not accidentally doubling up on risk. When you work as a team, you can achieve double the protection. Stronger together. Retirees, listen up. When you take your required minimum distribution from your IRA, that money becomes a regular bank deposit. And if it pushes your balance over the limit, that newly withdrawn cash is exposed. Plan ahead. Spread those RMDs across multiple accounts to keep them safe. Bank mergers are a hidden danger. You might have carefully spread your money across two different banks, only to have them merge into one. Overnight, your protected accounts become a single, exposed account. Stay alert. Watch for merger announcements, and be ready to move your money if needed. Financial awareness isn't a one-time task, it's a lifestyle. It's a family value you pass down like heirlooms. Stay informed, review regularly, adapt to change, and share your wisdom. When you make financial literacy a part of who you are, you build a legacy that lasts forever. Look at that pinnacle, Shiprock in New Mexico. It stands alone, strong and enduring, a monument to the forces that shaped it. That's what financial wisdom does for you. It makes you strong, enduring, able to stand alone against any storm. You are that pinnacle now. The economy is a giant wheel, with housing, jobs, and markets all connected. And attached to that wheel is a small but critical gear labeled bailout. Most of the time, it just spins along, doing nothing. But when the wheel starts to wobble, that gear engages. That's when the trouble starts. And then the wheel begins to shake. Cracks appear in the housing sector, job figures start to fall, market charts point downward. The bail-in gear begins to turn, slowly at first. Gramps Rick watches with concern. He knows what's coming next, and he knows who's going to pay for it. The bail-in gear spins faster, pulling in cash packs. On one side, reduced cash emerges. On the other, worthless stock certificates pile up. The wheel stabilizes, but at a terrible cost. The economy is saved, but the depositors are ruined. This is how the system works. Look at the contrast. On one side, depositors who kept all their money in one place, now holding worthless stock. On the other, those who diversified, their cash intact and shielded. The same storm, two different outcomes. The only difference: the choice they made before the rain started. Now the wheel runs smoothly, connected to multiple small gears, each with its own shield. The bail-in gear is still there, but it's just one among many. Its impact is minimized because the system is distributed. This is the vision of a resilient economy, built on the wisdom of diversification. What about your children's college savings? 529 plans are investments, not bank deposits. They're not at risk of a bail-in, but when you withdraw that money for tuition, it becomes a bank deposit. So have a plan for those withdrawals. Keep them under the limit and keep them safe. Health savings accounts, or HSAs, have a unique triple tax advantage. But the cash portion of your HSA, the money you haven't invested yet, is just a bank deposit. It's subject to the same rules and the same risks. Keep that cash portion under the limit, just like your other savings. Safe deposit boxes are a different story. They're not insured by the FDIC. If a bank fails, your box could be sealed and its contents could be at risk. Keep your important documents and irreplaceable items there, but keep your emergency cash at home or in a separate, insured account. Here it is, your financial fortress. Bank Tower, Credit Union Tower, Treasury Tower, HSA, and 529 towers, all surrounded by a moat of emergency cash. Every generation protected, every dollar safe. This is the blueprint. This is the goal. This is what financial peace of mind looks like. Look at that reflection. Mount Rainier perfectly mirrored in the calm lake. That's what your financial life can be, strong, majestic, and at peace. The blueprint is yours now. The tools are in your hands. Go build your fortress. The view from the top is waiting for you. On a warm summer afternoon, a grandfather sits on the porch with his young granddaughter. In his weathered hands, he holds a small wooden model of 4 jars. He points to each one, explaining in simple terms what they represent. The child's eyes are wide with curiosity, soaking it all in. The little girl holds up her small allowance envelope and asks, "But Grandpa, what if I only have a little bit of money?" He smiles gently and shows her how even her few coins can be divided among the 4 jars. "It's not the amount that matters," he explains. "It's the habit." Years later, that same girl, now a young woman, stands confidently at a bank counter. In front of her is a stack of cash, her life savings. She divides it into 4 piles and opens accounts at 4 different institutions. A small smile plays on her lips as she remembers that lesson on the porch. Now she's a mother herself, sitting on a porch with her own daughter. In her hands is the same worn wooden model passed down through the generations. She points to each jar, just as her grandfather did, and watches her daughter's eyes light up with the same spark of understanding. On the mantelpiece, surrounded by family photos, sits the wooden 4 jar model. A faded picture of Gramps Rick smiles down from the center. A mother and daughter stand before it, hands clasped, looking at the photo with love and gratitude. The legacy is secure, the wisdom lives on. Now, what about your own aging parents? Have the conversation with them, gently and with love. Gather their account information, check their coverage, and help them set up new accounts if needed. Protecting the generation that raised you is one of the most important investments you'll ever make. And if you're not comfortable with online banking, don't worry. You can do all of this in person. Visit your local branches, open accounts with paper forms, request paper statements. The principles are the same, whether you use a smartphone or a passbook. Your money can be protected either way. Don't forget about your estate plan. Name beneficiaries on every account. This ensures that your protected assets pass directly to your heirs without probate or delay. Keep a master list of all your accounts with your will. A little planning now can save your loved ones a lot of heartache later. So let's review the journey. You started with a shocking truth. Your $41,200 might not be safe. But you learned the rules, you discovered the strategies, and you built a plan. You moved from fear to understanding, from exposure to protection. That's real progress. Look at that mountain perfectly reflected in the calm water. That's you now, strong, clear, at peace. You've reached the summit of financial understanding. You have the knowledge, you have the tools, and you have the power to protect what matters most. The view from here is magnificent. In the town square, a festival is underway. Banners with the 4 jar symbol hang from every building. People of all ages dance, laugh, and celebrate. On a small stage, Gramps Rick stands, leaning on his walking stick, a tear of joy on his cheek. His mission is accomplished. All around the square, you see the fruits of his labor. A family opens a new account together. A senior couple smiles at their passbooks. A young adult uses a financial app. Children play with toy 4 jar sets. The wisdom is alive, thriving, and spreading to every generation. A young woman approaches Gramps Rick, guiding her elderly grandmother. The grandmother takes his hand, tears in her eyes, and mouths "thank you." The young woman explains that because of him, her grandmother's retirement is secure. Gramps Rick's eyes glisten with emotion. This is why he does what he does. As evening falls, the square is lit by lanterns and fairy lights. A large screen shows scenes from the journey, the empty vault, the falling dominoes, the 4 jars. People watch, reflecting on how far they've come. Gramps Rick sits alone on a bench, watching too, peaceful and fulfilled. Later, he stands alone on a hill overlooking the town. The festival lights twinkle below like a constellation. A shooting star streaks across the sky. He turns and walks slowly toward the sunset, his work complete. His body may be gone, but his legacy will shine forever. Let's do one final review of your $41,200 protection plan. Step 1, understand the risk. Step 2, know the limits. Step 3, check your exposure. Step 4, identify 3 to 4 institutions. Step 5, open new accounts. Step 6, divide your funds. Step 7, verify coverage. Step 8, set an annual reminder. What if a crisis happens tomorrow and you haven't finished your plan? Start today anyway. Even partial protection is better than none. Move $10,000 to a credit union this week. Open another bank account next week. Add treasuries next month. Every step you take makes you safer than you were yesterday. And remember, you don't have to do this alone. The FDIC and NCUA websites have free tools to help you. Certified financial planners can guide you. Your local bank or credit union can answer questions. Community workshops and libraries offer classes. Help is everywhere, just ask. You are now the expert. You've learned the lessons, you've built your fortress. Now it's time to pass it on. Talk to your family, share with your friends, engage your community. Lead by example. When you share your wisdom, you multiply its power. You become a mentor, just like Gramps Rick. Look at that reflection. The Tetons in the river, clear and perfect. That's your legacy now. The wisdom you've gained, the protection you've built, will reflect through generations. The torch is yours. Carry it forward and light the way for others. The journey continues, and you are the guide. A single pebble drops into a calm pond, creating ripples that spread outward. Each ripple represents a person whose life was changed by Gramps Rick's wisdom. He stands at the water's edge, watching the ripples with quiet satisfaction. He knows that his message will continue to spread, long after he's gone. Zoom in on one ripple, a family dinner table. A young adult is explaining the four-jar concept to everyone using a simple drawing on a napkin. The grandparents nod, the parents ask questions, the teenagers take notes. The wisdom is spreading, one family at a time. Another ripple, a community center filled with people of all ages. A facilitator stands at a whiteboard, teaching the four-jar concept to a new group. Hands raise with questions, notebooks fill with notes. The wisdom is multiplying, reaching people who weren't there for the original lesson. Another ripple, an elementary school classroom. A teacher holds up a colorful chart of the four jars. Children sit on the floor, each holding a small piggy bank. They're learning the basics of saving and diversification. The wisdom is taking root in the youngest minds, ensuring it will last forever. Now the pond is covered in countless ripples, spreading to the shore and beyond. In the distance, the town glows with the four-jar symbol on every building. Gramps Rick is gone, but his wisdom is everywhere. The legacy is eternal, carried forward by everyone who learned and shared. So here's the complete picture. You started with a shock. Your $41,200 might not be safe. You learned the mechanics of a bail-in. You discovered the FDIC limits and ownership categories. You explored credit unions, treasuries, and emergency funds. You built your fortress. You became the expert. And now the most important question, what now? Take the first step today. Right now, grab your latest bank statement. Check your balance. Ask yourself, is all my money in one place? If the answer is yes, your first step is clear. Start planning your diversification today. You are the captain of your own ship. The nautical chart is in your hands, showing the rocks of bail-in and the safe harbor of diversification. Gramps Rick is your navigator, pointing the way, but he's not touching the wheel. That's yours. The helm is yours. Steer wisely. Look at this family tree. Every branch holds a smiling face from our journey. The family on the porch, the grateful grandmother, the young advisor, the children in the classroom. And at the base, a small empty space with a sprout. That's where your name goes. You are now part of the story. Here we are again at Denali. The mountain stands eternal, its reflection perfect in the calm water. This is the peace that comes from a legacy well built. Gramps Rick stands at the water's edge, a gentle smile on his face. My work is done, he seems to say. The rest is up to you. From above, you can see the whole nation, transformed. The four-jar symbol glows on landmarks and homes from coast to coast. And high in the clouds, a translucent figure watches over it all. It's Gramps Rick, his spirit eternal, his legacy secure. He raises a hand in blessing, then fades into the light. All across the country, you see the results. A family in front of their new home, a retired couple toasting their freedom, a graduate hugging proud parents, a small business owner beaming behind the counter. Every dream made possible because their savings were protected. This is the power of wisdom. And the wisdom keeps evolving. A young adult creates a financial literacy app. A teenager starts a wellness club at school. A senior teaches a workshop at the library. The four-jar concept is spreading, growing, reaching new heights. Gramps Rick's ideas are now the foundation for innovation. Now look at the world. Every continent glows with the four-jar symbol. Lines of light connect them, a global network of shared wisdom. In Tokyo, a family learns. In Kenya, a village gathers. In Mexico, vendors divide their earnings. In London, bankers discuss. The wisdom has truly gone global. Here it is, the ultimate truth, distilled into one unforgettable image. 4 jars, 4 shields, 4 baskets. 1 bank equals 1 basket equals 1 risk. 4 jars equals 4 baskets equals peace of mind. Remember this image. It's not just a symbol, it's your future. Print this out, keep it handy. It's your bail-in protection quick reference card. The risk, the limits, your action plan, the reminder. 1 bank, 1 basket, 1 risk. 4 jars, 4 baskets, peace of mind. Follow these steps and you can rest easy. Your roadmap is now a pocket guide. We've covered a lot of ground together. I've shared everything I've learned over a long life. The rest is up to you now. Take these lessons, protect what you've built, and share them with those you love. That's how a legacy lives on. Thank you for listening. Now go and be at peace. And here are some resources to help you on your journey. Bookmark the FDIC's EDIE tool. Visit the NCUA's website. Find a certified financial planner. Check your local library for workshops. Help is everywhere. You don't have to do this alone. These resources are here for you whenever you need them. Look at this bridge. It connects fear and uncertainty on this side to peace and security on the other. Each plank is a step. Know the risk, check your exposure, open new accounts, divide your savings, verify coverage, review annually. You're standing at the near end. The bridge is built. Start walking. A new day is dawning. The sun rises over a peaceful landscape, painting the sky in gold and rose. The path is clear. The tools are in your hands. The future you've imagined, where your savings are safe, your family is secure, and your peace is unshakable, is waiting. All you have to do is take the first step. Here's your complete action checklist. Phase 1, understand the risk. Phase 2, know the rules. Phase 3, assess your exposure. Phase 4, take action. Phase 5, stay vigilant. Phase 6, share the wisdom. Print it out, check off each box, and claim your peace. Your journey, your checklist, your future. Pick a date that works for you and make it your annual financial checkup day. Review all your balances, check for bank mergers, update your beneficiaries, verify your coverage, adjust for life changes, and celebrate your safety. An hour a year for a lifetime of peace. That's a deal you can't refuse. Think of your wealth as a garden. 4 healthy plants with deep roots and green leaves grow in rich soil. Each one is protected by a small shield. Off to the side, a single plant withers, its roots exposed. Diversification nurtures growth. Concentration kills it. Tend your garden wisely. Here's your family protection plan. Grandparents connected to trust accounts. Parents connected to joint accounts and 529 plans. Children learning the 4-jar concept. Every generation connected to protected wealth. Wisdom flows through the branches, and the roots are the 4 jars, strong and deep. A legacy of love and security. And now the torch is passed. Gramps Rick's hand gently releases it and an outline of your hand reaches out to take it. The torch is yours now. Carry it with pride, carry it with wisdom, light the way for others. The flame will never go out as long as you hold it high. Remember this image. The 4 jars glowing in the darkness. No words, no distractions, just the symbol of everything you've learned. Let it be a beacon when you're unsure, a comfort when you're worried, a reminder that you have the power to protect what matters most. Remember this. Today is the day. Not tomorrow, not next week, not when you have more time. Today, look at your calendar, circle today's date, write start here below it. Your journey begins now, take that first step. The path ahead is clear, and you have everything you need. You are not alone. Look at all these hands reaching out to help. Family, friends, advisors, community. They're all here for you. Talk to them, ask for help, share your questions. You don't have to figure this all out by yourself. Reach out, connect. You are supported. Protected, that's the goal. That's the destination. Not just your money, but your peace of mind, your family's future, your legacy. One word written large and green, protected. You now have the tools to get there. The rest is up to you. Go claim your protected future. Look at the light filtering through this canyon. It's been carving its way through the rock for millions of years, creating something beautiful and enduring. That's what financial wisdom does. It carves a path through confusion and fear, creating a legacy that will last for generations. You are that light now. This isn't the end. It's the beginning of a life where fear doesn't dictate your choices, the beginning of true financial freedom, the beginning of a legacy you'll build for generations to come. The 4 jars are just the start. Your journey is just beginning. Go forth, you have everything you need. The knowledge, the tools, the roadmap. Your future is waiting. Your legacy begins now. Go forth and build something beautiful. A final, gentle wave and he's gone, but his words echo, go forth. And whenever you need us, we'll be here. The 4 jars will always be waiting. The wisdom will never fade. You're never alone on this journey. Come back anytime for a reminder, a refresher, a moment of clarity. We'll be here, always. Until next time, a final wave, a warm smile, and the door begins to close. But the symbol remains, glowing gently on the wood. The wisdom is always here, waiting for you. Until next time, my friend, until next time. Silence, just the image, the 4 jars glowing in the darkness, no words needed, the symbol says it all. As we begin to wrap things up, I want to leave you with a few final thoughts. First, remember that knowledge is only powerful when it's acted upon. You've spent this time learning, and that's valuable. But the real value comes when you take what you've learned and put it to work. Second, don't let perfection be the enemy of good. You don't have to have the perfect plan on day one. Start somewhere. Open that first extra account. Move that first $10,000. Every step you take is a step away from risk and toward peace. Progress, not perfection. Third, keep learning. The financial world is always changing. New products, new rules, new risks. The book I'm holding here represents all the knowledge that's out there. This video is just one chapter. Keep reading, keep asking questions, keep growing your understanding. Fourth, enjoy the peace you've earned. Financial security isn't just about numbers on a statement. It's about the freedom to live your life without constant worry. It's about knowing that you and your family are protected no matter what comes. That peace is priceless. Cherish it. Thank you for spending this time with me. Remember what you've learned, protect what you've built, and share this wisdom with those you love. That's how a legacy lives on. Goodbye, my friend, until we meet again.